Pakistan consumes nearly 60 billion liters of milk every year, making the dairy industry worth over $40 billion. On the Pakistan Stock Exchange, there are 4 listed dairy companies. Among them, one company has recently staged a remarkable comeback. Fauji Foods Limited, the makers of the Nurpur brand. Today, we'll explore how this company went from years of losses to one of the most promising growth stories in Pakistan's stock market. Until 2022, Fauji Foods was in deep trouble. They had a milk processing capacity of nearly 200 million liters, but actual production was only around 40 million liters. For 5 straight years, losses kept mounting, and their market share was tiny compared to giants like Nestlé. Investors started losing hope until 2023, when the turnaround began. So, what changed? Fauji Foods implemented 3 key strategies. First, they expanded distribution aggressively, growing their retail presence from 18,000 shops to over 35,000 outlets in just 1 year. Second, they focused on cost-cutting, switching to solar and biomass energy to lower production costs, and localizing packaging to save even more. And third, they captured big business-to-business clients, supplying milk and cream to fast food chains like KFC, Pizza Hut, Hardee's, OPTP, and OG Burger. The result was clear. By 2023, revenues jumped, margins improved, and investors started noticing again. Looking ahead, Fauji Foods has a bold target. By 2029, the company aims to reach 100 billion rupees in sales. They are also exploring exports to China, especially buffalo milk, which has high demand. With strong backing from the Fauji Foundation, this expansion seems achievable. But there is a challenge: the 18% sales tax on packaged milk. If the government restores zero rating, the dairy industry could see explosive growth, and companies like Fauji Foods would benefit significantly. From an investor's point of view, the story gets even more interesting. In the short term, analysts estimate the fair value of Fauji Foods to be around 12 rupees per share. But if the 2029 vision succeeds, the long-term fair value could climb to 55 to 60 rupees per share. That's why many investors see Fauji Foods as a high-risk, high-reward play, but one with strong turnaround momentum. From heavy losses to a solid comeback, Fauji Foods is rewriting its story. Whether it can truly achieve its 100 billion target remains to be seen, but one thing is clear: this is a stock to watch closely in Pakistan's dairy sector.